Just open your eyes and you'll see them. The black swans are everywhere. A truly unforeseen event to decimate the financial system. There will be no stopping it when it really takes hold. In fact, it has already begun. The financial crisis of 2008 was the beginning of the crash. We are clearly witnessing the weakness of this economy globally, and day by day, conditions keep getting worse. You came here for the truth, so let me unveil that for you. I have some very important information to get to today. Let's begin. We are starting with this chart. And this is the Chicago Board Options Exchange Skew Index. So what is that exactly? Well, that's the perceived risk of a so-called black swan event. It's reflected in the S&P 500 index option prices, okay? So we'll see that clearly. It's been within this window here, within this range. And it doesn't surprise me one bit that we have gone into uncharted territory. That's according to this index level here, far surpassing what we had seen before in these previous crises. Every single time. And now all of a sudden, we've gone way beyond it. How many times have I said this is back to the financial crisis level or worse? Happens all the time. This is just one of those events. Goldman Sachs and JP Morgan, everyone knows them, everyone loves them, right? Well, now they are creating a new method to gamble on what's coming. That's right. They're offering investors a new way to bet on the next one. We are talking about a major banking crisis. So imagine you can bet that there will be a crisis. Well, our friends at Goldman Sachs and JP are creating derivatives that enable investors to bet on or against high-risk bank bonds that financial regulators can wipe out if a lender runs into trouble. Imagine that. You have yet another derivative. So, let's talk about this for just a moment. In the financial crisis, we had a terrible time understanding the level of creation that all of these quants and all of these gurus created. We don't know what they all meant. The equations, I've looked at them, I've shown you here on the channel before. The equations for some of these derivatives are nonsensical. Okay? It doesn't make sense. It's just completely ridiculous. Okay? It's a mathematical equation. That's what you're betting on, essentially. There's no underlying asset. There's no underlying anything there. It's just an equation. And that's what billions and billions and billions of dollars was put into these ridiculous so-called investments. Okay? We have the collateralized debt obligations. We have the CDO squared. We have the CDO synthetic versions. We have all of these different types of so-called diversified assets which have wreaked havoc on the economy. I mean, look at the so-called asset-backed securities. Look at the mortgage-backed securities. Look at the credit default swaps, which we're not allowed to talk about because they happen to just take down a country or two. And all the while, these derivatives were not removed from the system like they said they would be. They just lay in the shadows, that's all. They still exist today, they are growing in popularity, and it doesn't surprise me one bit that the market is more fragile today than it was back then, but it is being sustained by, oh you guessed it, central banks. That's right, thank you central banks for saving the day. Now, central banks, in this chart here anyway, they're suggesting what could happen should the central banks decide to pull back on their schemes. And all I wanted to note was not to get into detail of this, but this is interesting just to show you the different purchases from the different central banks around the world. Let me just inform everybody who doesn't seem to understand this. All central banks are involved in the same criminality. And there are people out there actually saying that the central bank's printing money, giving it to financial institutions, doing it all in secret, having no transparency whatsoever, having been caught over and over again lying, not supporting the actual real economy, and instead giving money printed out of thin air to whoever they want, and we're not allowed to know about it. And you have people saying that this is good. I don't know what you're on, and I don't even want to touch it. Absolute insanity. This was brought to me by a subscriber. S&P 500, how much is too much? With only 3 of the 11 sectors counting for more than half of the index. 3 of the 11 sectors, half the index, is the passive index diversified, okay? It's getting into that. There's one thing that I wanted to know from this. So obviously, information technology making a big percentage here. 23%, significant. Now, when you break that down, half of that amount is Apple, Microsoft, Facebook, and Alphabet, or Google. 50%. Think about how much of the stock market is riding on 4 stocks. This is so dangerous that people don't realize this. If these 4 stocks came down, even a relatively small percentage, let's say 5, let's say 8%, that could start the tumble downward. It doesn't take much is what I'm saying. There's fragility there. What if we find out, like all of these other companies, what if we find out that their numbers were fraudulent? Maybe it's just 1 or 2 of these companies. And I'm just suggesting, I'm not saying anything. All I'm saying is, look at how fragile this is. It isn't the 1,000 companies, let's say, that could be there and these 1,000 are doing good, or 9 out of the 11 sectors are doing good. No. It's 3 sectors making up half the index, and then you break it down, you realize, oh, wait a minute, actually it's only a handful of stocks. That's really bad. That is a sign of a weakness in the stock market. And as a result, these central banks have been doing such a great job, in fact, of maintaining the thought to everyone that's blind that everything is okay. Well, you're in need of some true education. Don't let the student debt stand between you and your dream of home ownership. There goes my sarcasm voice. How many times have you thought twice about making a big purchase because of your student loan debt? Well, not anymore. That's right. We're looking at this amazing, super fantastic new product that's available. Check it out, everyone. The Money GPS just loves this. That's right. Everything I've talked about is right here. Our student loan debt mortgage program, the first of its kind, is being rolled out in a partnership with our parent company. Customers may be eligible to receive up to 3% of a home sale price in funds that could be applied toward paying down student loan debt, and additionally up to 3% towards closing costs. That's right. If you have a lot of student debt and that's the reason you're not able to afford a home, have no fear. Give your money to us. We'll take care of it. How about we swap one debt for another? Who in the right mind is going to do this? I know there will be people that do it, but what in the world are you thinking? They do make the point in here that student loan debt is over $1.4 trillion. You're looking at credit card debt, total revolving credit. I've shown you the Fed charts on here before. Over $1 trillion. You're looking at national debt, $20 trillion. Look around the world. You see nations falling further and further into debt. Look at the cities. Look at the states and the provinces, the regions. All in big trouble with debt. And so the Keynesians, so the supporters of those who control us say we have nothing to worry about. Once again, for the 100th time, I will tell you, look at what happened to people's pensions when they run into debt. Look at what happens to the nations like Greece, who have to sell off their most precious assets because of debt. Debt is the system of control of the technocratic elite, and they will use it against us. Moving on. Morgan Stanley plans to charge about $2,500, that's right, dollars an hour for private meetings with its stock analysts. $2,500 an hour, all right, for some stupid stock analysis. What in the world do they think they're up to when you have computer algorithms doing all of the work? Computers, programs, deciding what these stocks will be at any given moment, and you're going to listen to some guy wearing a nice suit and tie in a nice boardroom, and he sits you down and he tells you what stocks to invest in at $2,500 an hour. This game is rigged. This game is rigged. It's a show, and people don't realize it. And I think I'm sounding a little bit crazy because I keep saying the same thing over and over again, and yet there's more and more people who are falling for this garbage. You want to pay the $2,500 by all means. And this is a comparison chart here showing you the biggest names of all these law firms out there. Even the lawyers don't charge that much. It's crazy. Anyway, that's all for this video. If you found it informative, please give me a thumbs up. Remember that giving me a thumbs up truly supports me. I do appreciate it. I want to extend my gratitude to every single person out there who supports me in one way, shape, or form, whether that is just, a thumbs up or comments or subscriptions on this channel, or the people that support me financially through every means, whether that's, cryptocurrencies, whether that is with the Patreon, whether that's PayPal, anything. I really do appreciate every single one of you. Every time I receive a donation, I email that person, or I contact that person, message that person in some way to try to extend my thank you to you, have a personal message to you just to say thank you. So that's all. If you found the video informative, I know you'll find my books, The Money GPS, and my new release, Global Economic Collapse, even more informative. The links are in the description below. Take care.